Welcome traders, it is Sunday the 19th of June 2022 and I'm preparing this for the week commencing Monday the 20th of June 2022. So let's just kick off with kind of some of the things I'm keeping my eye on. Okay, so first of all, US inflation and global inflation, depending on which country and depending on which sector we look at, it's either slowing down, not going away, but just potentially is it pausing or is it potentially starting to slow down? Its rate of acceleration is really what I want to be kind of keeping an eye on over the coming weeks. So inflationary risk, as far as I'm concerned, I'm going to treat it as though it will remain until the end of the year. If it finishes 3 weeks or 3 months from now, then great, but I'm just going to be prepared for that. The Russia-Ukraine war is ongoing, and that as well as supply-demand chain issues, delivery chain issues as a result of obviously COVID over the last couple of years, has also obviously these are major cogs that have contributed to the current inflationary crisis that we have, and I'm interested to see what happens once those two have been effectively reduced or not as much of a core factor. So we'll see how that goes. Now, main thing, obviously, one of the things I'm watching in the US with November coming up, with midterm elections coming up, is, and the reason I do this is because the US, first of all, is meant to be kind of that icon of democracy. It's definitely leads the planet in terms of representation, and so my concern is that it's currently obviously under attack. We've got a rise of white nationalism and fascism, obviously now just part of the mainstream right-wing politic body. Violence is on the increase. There's just a lot of other kind of concerns, and of course, Americans often under the mistaken belief that it is the greatest country in the world. It's now, in terms of the democracy index, is now dropped down to 36th at the bottom. So that's really, out of 194, 95 countries, that's really not that great, and it's at risk at any rate. So now let's go and have a look at what else is. And November will literally be a turning point. If one party can salvage itself or can salvage the country, then at least there is some potential there for change and salvation. Alternatively, there will be a big decline in the US status, just even over the next few years, and so it's a serious concern. Now, if we have a look at the economic calendar coming up this week, I think focus just for now for this is what's going to be topical this season, is keeping an eye on any discussions that are focused around inflation. This is really the main concern. And therefore, that's what everything is going to be listening for. No matter which country we're listening to, that's the attention is going to be paid to any central bank adjustments. But we do have this week, the Fed is going to be testifying, and so I think there'll be ears to the ground on what is the language, or is there any talk or any fear or any panic or any major changes needing to kind of happen. So that's really what I think is could add some additional volatility to the markets this week. Let's go to the charts and see how the charts are looking. Okay, so starting off with the volatility index here. So it's generally, as I said, or as I've mentioned in the last few weeks, it is continuing to creep up. And I don't expect any of that to really change. So I'm expecting just continued slow but steady rise in volatility. And this might be something that becomes more significant down the line. So just looking at, for example, at the dollar index, although we had a little bit of a rejection last month and the market is struggling a little bit in this area, sort of potentially with 105, that could possibly turn out to be very significant, but we'll only know in a month or two's time. The market at this point in time does appear to want to continue high. We've got a nice little bullish candle just coming back around previous level of resistance, acting as potential support, and it might want to continue up from that. I'm just noticing the MACD is still producing lower highs, so there is some potential bearish divergence in this, and therefore it's hinting at the possibility that the price could be struggling with this level, which could ultimately lead to a deeper correction, but there's not enough at this point. So I'm going to be prepared for both outcomes this week. Either that dollar is going to continue to strengthen. Now, the reason I bring that up is because ultimately this is really that line in the sand. Once the dollar fully breaks through beyond this level of resistance, for example, here, if we go and have a look at the euro dollar, we start to move beyond this range that we've been in, going back, well, first of all, that it started around about 2015, and obviously we haven't been in this area prior to that. We haven't been there since about 2003. Let's go back that, even possibly 2002. So I bring that up because it means that there has to be, you have to admit then, concede at least that the possibility is we're moving into some new form of market dynamics. Doesn't necessarily have to be bad, just not all change is bad, but it does mean that there is a change nonetheless. And so this becomes that sort of line in the sand. So I'm going to be having a look at that because it isn't just always up to the dollar. There are other currencies that might very much want to enact policies that keep them within this range. But we do need to be prepared for that this could be it deciding now it ultimately wants to break out. So I'm going to be prepared for that this week. So I'm looking, we've got a bit of a bearish candle setting up. If we're going to go back and test this level, what I'm going to be looking for on both the weekly and the daily is candles to start failing to produce those wicks, starting to close right near the lows, which means that it's now physically aggressively closing lower, and therefore the dollar would be closing higher, and it's starting to work its way outside of that. Once it gets to this level, it could actually find that it starts to accelerate. So those are things to watch out for. And if that is going to be the case, it could be this week or next week because we're so close to that particular level. If we look at sterling, for example, I mean, it's really interesting. There are times when the market gives very much clearer indications of which way it's already leaning, and there are times when it's giving mixed signals. Here, for example, we have actually really got bullish divergence. The market gave a really strong reaction on Thursday, and then gave some of it back on Friday. So you can see a bit of a rejection here, and again off this key level. So what could happen? One potential outcome this over the coming weeks is to see the buyers start to come in, the sellers start to sort of abate and extricate themselves from their positions, and that sort of weighting starts to shift, and so we get more and more bullish candles, and then we get that clear shift to the upside. That is a possibility, and obviously I'm going to be watching for that. But this area we're in, where this battle is going to be happening, is all around this level, and it makes it very difficult as a trader to be trading at a major level very close to those particular targets. It makes it very tricky because there's clearly going to be a bit of a battle going on here. But what I did want to mention is, yes, there is some bullish divergence on the dailies, on all the charts, on the dollar index, as well as the euro, the GBP against the dollar. So let's have a look at, say, Kiwi dollar coming back down, testing this level. If it had finished with a bullish candle, we'd have some probably bullish divergence. Didn't really do that. At this point, it looks as though there's some bullish divergence on the daily, but it isn't necessarily done testing that level at this point in time. And you can see we've got those. So it's going to be, I'm intrigued. Are we going to go into a new type of market dynamics, or are we going to come back within that range, for now? So having a look, say, at dollar yen. Dollar yen has really broken outside, and this is another reason why it's valid to consider that the dynamics could be changing. Is dollar yen is certainly one currency that has definitely broken outside of its recent, certainly of the last decade. Right, it's now clearly in an area that it hasn't even been in since 2002, and therefore that could be something that's going to happen with other currency pairs as well. It is at a major level, and so yes, there is the possibility there could be a bit of a correction this week. It is overextended, but you can see as well there's the sentiment that's got the markets to where they are now is still there. It's still there. It's still pushing as much as it can, and so I need to be prepared for that. And that can happen where you get that until the end of the week, you get a bit of a pushback. So last week, I was looking to see if there was a big reaction from the markets, and interestingly enough, there was, but the markets managed to cope relatively well, especially the fact that on Thursday we got a weakening US dollar, and that to me argues the counter case that we could see the US dollar starting to take a bit of a breather where it is now, and this week we could see a bit of a correction. So in order to see or to feel that confident that that is the case, it's starting to happen, I really think the case, for me, it's going to be watching that 4 hour, watching these levels on the 4 hour, starting to see the 4 hour start to go into a downtrend and start to break lows. That then means that obviously as the week is unfolding, we're starting to get a bigger correction and a rejection of those major lines in the sand. Looking at dollar Swissy, for example, you can see a strong reaction there. You can see the current monthly candle giving those strong rejections. You can see a bearish reaction off this on the weekly. You've got, this is an equal high, so it doesn't really argue to say it's a lower high in terms of bearish divergence. But you can see the point is not necessarily every major pair is looking at that. And we also know the S&P is now starting to stress a little bit about that, about the CHF. So we've got here, for example, as well, dollar CAD pushing a little bit higher, getting a little bit of a boost off that, a bullish candle over here. So dollar CAD's got its own thing going on. So all of that really with the majors, that is something that is going to be, has to be watched and monitored, especially by day traders as we're close to those levels, and it's just adding that extra volatility. So if you're not aware of this, you're probably going to experience a greater number of losing trades because you're not trading around that. Just one last thing, looking at the Russian ruble, look at that bullish daily candle, bullish weekly candle, and potentially bullish monthly candle, just implying that there could be a rejection of these lows and a pushback up to that. So that this would then form the basis of the dollar ruble, and to see what happens with that. All right, so moving on to the commodities. So we did, then we have a breakout of this. We've come back in that, and that is quite a strong rejection of those levels. So this can be treated at this point, obviously, as a false breakout. And look at the monthly now, you can start to see some exhaustion coming in on that. The implication, the hint here is that that it's now on the table that the markets are going to start to have a bit of a correction, similar to what we had here in November. But the markets are now almost as though they are shaping up, especially if we close as a bearish red candle here, that there is a possibility the markets are going to hit a little bit low, might do a shallow, let's call it a 382, let's call it a 40% retracement at a minimum. That is a possibility. Again, the clues will be on the daily. We're starting to break below these lows, but it certainly is a possibility because we have that is a false breakout now. So let's have a look at which ones might be influencing that. Gold itself, not really looking that bullish at the moment. It has managed to stay back up above that 1834 level. It's an indecision candle here. That could indicate we have a series of higher lows coming in here. We have a long-term flow to the upside. This could, if we break the high of this, indicate that gold is going to keep trickling its way up, but it is not under any kind of obligation to do that. So just kind of dispelling that urban myth that, you know, in periods of inflation, gold is an inflation hedge against inflation. There just isn't any real big evidence to show that at this point in time. It's not getting any extra love or anything. Look here at silver, that's come back under this major level at $22, now producing a bit of a potential swing high here, bearish candle. I'll be looking for possibility. I mean, the weekly here looks like it's got buyers below this and sellers up here above, so it's not giving much clarity there. Looking at copper, so that's quite a bearish candle. It's pushing almost a momentum candle, breaking outside of this and starting to close lower. That weekly one as well, just hinting that at this time copper looks as though it wants to go a little bit further down. Then we've got natural gas, strong bearish rejection of the highs here. This is certainly contributing to the GSCI index over here, so I think that is an indication, it's fair to say, that natural gas is giving so far the signal that it potentially wants to come down and test these levels, or possibly even come down a little bit further. So interesting, considering that you sort of get the feeling over the last few months everything's just going to keep going up. Look at some of these markets, look as though they want to take a bit of a breather. All right, let's look at West Texas, look at US crude oil. You can see this bearish rejection, same thing here. You've got that depletion coming in, the weekly candle coming down here. We've got that false breakup. We're back under this level at this point in time. So it's almost even showing its case here that crude oil, US crude oil at any rate, especially if it closes as a bearish candle, has possibly got its eyes on coming back down towards, say, $85. Let's see what the Brent is looking like. Also as well, some definite depletion. This needs to close as a bullish candle to dispel that. It's just struggling. It doesn't mean it might not sort of recover a little bit and push higher, but that is now for me the lesser likely outcome. And now I'm looking to see if it's starting to break through these levels here, go down under 100 and start to head lower. And the furthest that it could come down, obviously there's no limit, but it could reasonably come back down towards the moving averages here and tap on 80, but certainly down towards 100. So interesting, but it's the weekly that is giving a bit of a clue to that in terms of that swing high. Let's go and see what happens with sugar. We've got some absolute depletion here. We've got that forms a bit of a double top, and that probably implies we're going to start to head down here a little bit and looking bearish. So interesting. Coffee as well. Look at that, more depletion showing up here in a bearish indecision candle after a really strong bullish bounce. Just means lots of buyers below here, but just not enough above this area. And that's a little bit of a theme that is cropping up so far. Let's have a look at wheat. Wheat's big, kind of look at that solid depletion. And again, with everything going on with the war, my expectation, or I think it's reasonable, is that you kind of, and with inflation and talk of the price of bread and everything going up, but it does appear as though the market is, at this point, is now almost kind of done with that for the time being, and possibly wanting to take a bit of a breather. How far down it will come, that's going to be a bit of a question, but we've already got a lower high in the weekly. We're starting to come down towards these levels here, and breaks below those start to put the previous highs back into, as a destination at any rate, puts that back on the table. Cotton, not really going anywhere very much. This depletion here, I expect this to stay reduced. Look at that crystal clear line on the weekly. That is beautiful in terms of its clarity. So again, I wanted to just touch that, but it's got to be just placed there. Anyway, 120. It's struggling with that. Let's see. And then moving on to the global indices. So there's a couple of things I wanted to talk about here, but I also don't want these videos. I hate it when they exceed 30 minutes. I want you guys to know that it's always approximately 30 minutes. And if it's more than that, it's because it has to be. So at this point, you could see a strong correction down. We're almost closing down so far, closing down towards the lows. And therefore, there is this possibility. So one of the things I want to put on the table, and it's not, I'll know more or less when I'm expecting it to be the bottom, and we're just not there yet. So first of all, you know, we often have these big moves down. We get a nice little bullish candle, then we get a bit of a recovery, big move down, bullish green candle, and then we start to move up. We don't have that anywhere here. So that does tell me that the earliest point at which I could expect to see a green candle won't be this month's candle. It could be July's, it could be August, but it's not going to be anytime soon. So that's something that I'm going to be looking for, is to see potentially if the market comes down towards these old highs, and then I'm going to be looking for a bullish candle in the coming futures, because to me that's going to be the first sign that the buyers are coming back into the market. Doesn't mean they'll succeed in turning it around, but it does mean they've actually started to return to the market, and I'm not seeing that. So for me, for now, I'm expecting the market to continue down or stay where it is. I think it's in a great area to find some stability, but I'm not really expecting it to show signs of recovery until the earliest would be at June, and we could still, obviously we can have a bigger correction. That was what I wanted to add this week, but I am saying that where we are, the other thing is, you can see in the past we've often come down close to that 50 moving average. Here we sort of overshot it a bit. We could be coming down. This area here could turn out to be the recovery area. So I'll be looking for changes in the weekly and obviously in the daily, but I can see that it does appear to sort of be slowing down a little. I think it's still got some room to go. And so especially, let's look at the S&P. So I take the S&P, first of all, because it's largely mid-cap companies and it's just a larger number of constituents. And so to me, the sample size works. So what I've done here is I've drawn this line that runs approximately, okay, it's not a trend line, not in the traditional sense. It's not a support or resistance trend line. It's just a line running roughly through the price action here, through the center of it. So imagine that price was revolving around its true value, and I've run a line roughly through the center to get a sense of where that true value lies. It's a very primitive approach to doing this, but it isn't necessarily completely out there as an idea, just to get a sense of where the true value of the markets are. So this little blue box here as well highlights actually where it gets really fascinating is when you move up to kind of like a quarterly approach to the markets. You can see that in the past we've come into these areas. If we then go up, and this is a big one, the yearly, this is something I'm having a look at. This, I think, is an important suggestion or consideration this week, is we've got currently a bearish candle at the moment, and we're very close to breaking below the low of last year's low. Okay, so I've actually highlighted it here on the chart. That then sort of technically becomes the potential for a swing high, and if that is the case and it follows through on that, we could see the market heading down towards 3,000 or potentially even down towards these the moving averages down here. So I'm drawing that because we're that close to potentially doing that, and especially if we close below that heavily, then that's usually the case. We could get an engulfing candle. If we break below it and then close up above it, we just have an engulfing candle. But it's not a great sign. It's not a hugely, we had a nice little correction with the COVID lows. We've pushed on and we're very close to breaching that. So it's just something I want to be paying attention to. That's why there could be some real twitchiness around the 3611.50 mark, or just 3611, let's call it. So I'll be watching that. But it also means that coming down towards the 3000 mark is feasible within, if this is just a trend in isolation without overthinking it, that is also something that could potentially be, that would kind of highlight these areas. It shows that we could come down to these old highs over here. And from a Fibonacci standpoint as well, we're in that 302 area. This blue area is actually a fib box. So this is a 302, 50, and 618 to the bottom on either end. So the 302 at the top, 618 to the bottom. And so that's why we could feasibly come down to the end of that 618. Anywhere in this area is still acceptable. And to me, the signs of it turning around would then be a nice little bullish candle. That would tell me that is the point at which I could start looking for a confirmation of a change in trend. So this is my approach to it. I'm giving it, I'm not assuming anything yet. I'm waiting for that chart to then produce that information, and then I can start to trade off it. But just showing that the earliest point at which the markets could turn around feasibly is actually where they are now in this little area here. As we approach the 50 moving average, roughly where we are at this major level of support, or the next one below that. These areas just below here at, let's call it at 3.6 and potentially down to about 3.4. This area is it is possible that the markets could turn here. There's a little bit of bullish divergence creeping in on the daily. So the market this week, I think there is the possibility the markets might desperately try, especially if the currency markets are pushing back. So there's a line in the sand at the moment. Dollar index, major currencies. And I think also there's a possibility the markets are going to be sort of swinging around off these levels. I'm talking quite a bit about this, but that's really what I'm going to be using as my approach on this. So this week I want to see if the markets try to push up again. They might head down a little bit and then try to rebound off those areas. Possibly more bullish candles coming in on the daily, and therefore there could be some support here for a bit of bullish divergence, which indicates the weekly might want to do a bit of a correction. And this is important because the question is, are we anywhere near a valid turning point, or are we not even beginning the drop to the downside? And so I'm going to treat it as though it has to be kind of, I'm going to treat it, I guess, innocent until proven guilty. This week, I'm going to be prepared for the possibility the market is going to touch some of these lows, but also that it's going to try to push up a little bit higher. For me, the big clues will be if it breaks those, and if we start to get a bit of a bullish candle happening, that could then be that turning point. So that's something that I think is very feasible over the next 60 days, is to see the first attempt to recover from this on the monthly. And I'm not going to assume anything else, because the market is always at its absolute most bearish sentiment-wise when it's already started to turn to the upside. All right, and it's often at its most bullish when the market has already started to collapse, so to speak. So that's what I'm going to be looking for here. Just looking at the Russell as well, starting to breach through this 1700 level, possibly coming down. I want to see if the market is going to be able to push back a little bit this week. The FTSE as well, coming back into these old highs. You can see closing. That is a very, very, very bearish candle at this point. And it's down below that 7,000 mark. I want to see if it can come down towards these lows. So I am prepared for the market to do a mixture of both. Actually try to push back up as well as possibly tap some fresh lows. I would be surprised, but it's not impossible. But the least likely for me of the list of things to happen would be an acceleration this week, unless something else unexpected happens. And again, that was where my eye would be on that. You can see here, for example, as well, the DAX coming back into these old highs. I have to see how it behaves at this level. We've dropped through before and then tried to push back, and it's just weakening and just coming down lower and lower and lower. So I need to keep an eye on that. But it's now still again on that 50 moving average, and you can sometimes get a push from that. So that's what I want to be watching. Otherwise, the next level down starts to head in towards that. I'm just going to put it in here, starts to head in towards that 12,000 level. Okay, Euro stocks as well, coming certainly back down towards this level. These, a lot of them are sitting again at key levels where I want to see if they can rebound from that. I'm not going to assume they are. I'm going to wait and see what price does and do that. You can see as well, again, here we've got a bit of quite a bearish candle that formed on the neck high. But they haven't dropped as far as the US markets. But the fear then comes if they've only just started to drop and then haven't, you know what I mean? And they're going to do a lot of catching up. But it just, in my mind, these moments in time should be seen from a different perspective. They should be seen as possible sales in the markets, and therefore sales in equity markets, and therefore possibilities to finally get access to blue chip stocks at a more affordable price. And that's really trying to kind of see see the forest for the trees. Now, the Australian one as well, coming again back down to this level. It's almost right down and closed there. Could that have been the real part of the fear, and then it's overreacted, and the market can, of course, overreact, or has it still got further to go? So should we put another level in here just to observe where the next kind of level is? Let's see how that goes. I think that, and again, it's in my mind, if the market falls aggressively, that's more fear than it is actual qualitative, reasoned kind of decline in prices. It's never really reasoned, it's always fear. We always want to assume the market is rational, and it just isn't. There's not enough evidence historically to support that. So therefore, Royal Mail, for example, going through these, I want to go through these quite a bit quicker because I've got sort of 10 minutes that I want to try and wrap everything else up in. Yeah, I want to see if the markets can rebound a bit. There's just not a lot of faith in this at the moment. Let's have a look at Amex. Amex coming down, a bit of a pushback towards the end of the week. It can still potentially come down and tap 130 for these old highs, but to me it looks as though the first thing it wants to do is just try and come up, maybe tap 150. If it can get back over that and back above 156, fantastic. But if it fails and there's strong rejections here, then I think it could potentially continue down. Let's have a look at Apple, for example. So Apple has got this area I've highlighted in the past. This is an area of where the previous highs are that could ultimately turn out to be support. But a lot of charts that have these areas have all come and closed below this. And that doesn't mean they couldn't. They'd have to just be a really big boost that happens in the coming week to get the market to not even go any bit lower, but actually start to reverse. And I think statistically that's a bit of an odd, it's an unlikely thing, less likely thing to happen. So here I expect these markets to possibly try to push down and tap at that 110. But there are a couple of green candles that have come in. It's not doom and gloom. There are definitely some green shoots. We've got some bullish divergence, and all of that says to me that the market is going to try to push back up. It's going to try. Whereas if none of these are here, I wouldn't even mention that. But the market is showing signs of people wanting to push a little bit high. Take ARK, for example, here. A lot more green candles coming in. So we had a move which resulted in a bit of, you could call it a bear flag, a breakdown, but then the price didn't come down and touch these lows. Actually, it's already started to produce a couple of green candles. And again, here on that weekly, producing a little bit of a bullish green indecision candle spinning top. That hints at the possibility this week that could often occur at turning points. We could see this starting to climb a little bit higher. So that, and again, right here, it's at these significant lows in the past, and therefore I want to see if we push back from that. AT&T, big correction here from this area, so it still hasn't managed to get beyond this strong resistance area. Okay, Berkshire Hathaway. So Berkshire, again, here's another example of a chart that has breached major support level and closed below it. I don't think that can be ignored. I mean, I think, again, it just tells me, yep, heavy sell-off this week. And therefore the question is, are we going to start to approach these previous levels? So let's go in and put another level down there. Are we going to start to head towards, I wouldn't normally do it there, but let's say we go through, head towards 223, or possibly a little bit lower down towards 200. That is a possibility. And there's there's no signs of bullish divergence, no signs of bullishness. This appears as though this market, my goal would be continuations to the downside here. Let's look at BP. Strong bearish so far, a bearish engulfing candle, very strong, heavily closing near the lows bearish candle with bearish divergence. So a lot of this hinting that BP certainly is potentially looking at heading lower. So that's not a good sign for BP. Exxon will be a very similar, that's also a very strong bearish candle, which just implies that if it continues like this, it's going to head back down towards these old highs. So interesting, because now we can see that impacting some of the companies that have benefited from the inflation in terms of, well, with regards to energy at least. Coca-Cola still holding strong. It's back into this area, so it might want to come down and test at 56.40 level. I will keep an eye on what it does this week. Some bullishness coming in here as well. I want to see what happens with this. Does it push up or push back a little bit from that? Sorry, I want to see my 4 hour here. General Motors, wow, right down again, closed below that kind of level there. These are big, these are quite significant things given all of that history. A lot of those, that implies that it's done that this week it might take a bit of a breather, but it could end up closing even lower. Same thing here, almost a bearish engulfing candle for JP Morgan Chase. Could have 106 its sights set in on that as well. Meta pushing near those lows. I think it's still interested at least in testing those 150 levels, and so I think if anything we're starting to see more fear is going to start to creep into the markets because they're not really slowing down. Here, for example, if we look then at Morgan Stanley, very strong bearish close right down to the lows. It might be heading down towards 60 or 52, 60, I beg your pardon. Netflix as well, kind of staying where it is at this point in time, but it has pulled in towards the moving averages, produced a bearish candle and broken the lows. So some bullish divergence showing in on the daily. I'm going to say for now that I expect it to kind of stay in this area. It might want to tap down a bit, but it has got some bias, so it's going to be interesting to me because they won't all necessarily turn at the same time. But even Nvidia here, for example, is starting to show some bullish signs at this level. It's got a level here, it would have to gap down and really breach that. And it's still, as far as I'm concerned, in an area of value, these green boxes being monthly and quarterly and annual areas of potential turning points as well. So that is interesting to me. Definite bullish divergence on that. Is it going to stay where it is or potentially push higher? Some of these I think are the ones that I expect them to try and push a little bit higher here as well. Bullish divergence actually now creeping into PayPal's weekly chart, which to me means there could be a push above 90.50. I mean, it is possibly just right down at these absolute lows. So it could be, it's interesting to me because how many you keep going, how much further could these markets fall? If they've already done this, how many of these major companies could only, could you argue that they've only gone, 30 or 40% of the way down, and we could see another 30% kind of drop to the downside from a global perspective. It just gets tricky to imagine, what some of those companies are going to do if they're near rock bottom, or if they've given back 70% or 80% of their value. I'm always interested in that. So again, we've got this attempt for price to try to push a little bit higher here on the spider. Let's have a look at Spotify. Spotify again. Spotify is similar, to PayPal and Nvidia, it's going to try to push back a little bit, but it's struggling, and it's got some bullish divergence for sure, but we'll see if it can manage to hold on that. Let's look at Tesla. So Tesla's monthly candle alone is kind of hinting that it might still continue down towards 600 and 541. We'll see how that goes. So that level, I would say that the previous week's low, last week's low, is going to be possibly relevant here, sitting at, let's call it 620, to see if it's going to breach that, and possibly. And again, this area here for me is also a good area of value, where I see how that goes. This level of support, possibly it wants to just continue down and test that. I'm not seeing too much bullish divergence there. Looks like it might still want to continue going on, and momentum still being bearish. Then having a look at Vanguard, also this looks as though very much bearish momentum in play. So this may just want to continue. There might be some moves to the upside. Interesting, maybe some of these will just have a bit of a bump to the upside and then continue down. Some of them might have a bit of a bump to the upside and stay where they are. So again, as I said, there has to be a shift between now, if we are going to be turning around, because we know that there's going to be a turning around or turning point in the future. There has to be at some point, right? And so the question is, it's just a question of when. And so will the first bullish candle that we see, the possible bottom of this, be in July? Well, let's find out. Okay, so finishing off with the Treasuries 10-year T-note. Look at that, how it's just tapped that major level again. So interesting how many of these are at key levels at the moment. Didn't finish as a bullish candle, in my opinion. Not really. There's a little bit of bullish divergence on that. It was an attempt. There's bullish divergence on the daily. Not really so much happening here on the weekly. I need to see price break above these levels. Otherwise, my expectation is for this to just continue down. And again, if it breaches these levels, it makes sense that it would just follow through on those. Look at this as well. Look at that kind of the euro, the bubble just pushing right down to 120. I think it's fair to say we can add a level in there to see if that level holds. Otherwise, I would expect this to continue. Now, it is overextended, so I'd like to see if it can do a bit of a pullback, certainly on the daily, back into 124, 122 before carrying on down. Eurobond will be a very similar scenario, so just going to put that in as well, these levels over here, to see what happens with that as well. Similar kind of expectation, but interesting enough, a lot of bearish candles now. We've got some bullishness coming in, so the sellers are either sort of extricating themselves from their positions, so I'd expect a bit of a push up, but if there's no strength, I don't expect it to go up very high from here. And finishing off with crypto. So cryptos, we can see, have had a strong drop too, same as equity. So again, there's always that strong correlation, and I am always concerned with folks who listen to, there's a lot of echo chamber kind of content on cryptos. Essentially, the simplest thing is cryptos are very much tied and correlated with equities. That's it. That's all that matters. And they have demonstrated themselves, at least I think, in my analysis, consistently over the last couple of years. And therefore, that's really what I'm going to be paying attention to. So they continue to go lower. We've broken through major levels. We're coming down to test these other levels here, a little bit lower perhaps in terms of that. And I think, I wouldn't expect Bitcoin and Ethereum to necessarily break apart in terms of one deciding it's fine and the other not. I expect them to potentially work together. So there's possibility here that this is going to do pullback and a continuation down, but this trend is relatively healthy and doesn't seem like it wants to go anywhere, at least until it gets to these major levels here. Looking at Ethereum in comparison, that's already popped below the highs of December of 2017, 2018, I beg your pardon. And so, again, it's a nice area if we can. We've got bullish divergence on the 4 hour, so that just hints that it might want to take a bit of a retracement on the daily. So that would be interesting to me to see if we do get a bit of a retracement on the daily that starts this process. Some of the 4 hour charts are showing bullishness. Yeah, for example. Okay, this looks as though it's prepping Cardano for a bearish breakout. So let me just put a level in there. This looks as though it's prepping so far for a bearish breakout to head a little bit lower, but we've got, so I'm curious to see where these are going to go. And again, if equities drop lower, and then there's this opinion of, cryptos go to zero. Therefore, there's this implication that, they are worthless and they're not going to be a part of our society going forwards. I think then you have to apply that logic and reasoning to all the tech companies that look as though they're heading down towards zero, absolute zero, which is a bit crazy to do that with companies that we still use on a daily basis. That doesn't really make sense to me. So it just means that for whatever reason, they will undoubtedly become clear at some point. Although we use these tools on a daily basis, that there isn't really a return to shareholders in terms of value, and therefore they've kind of ultimately lost favor with that. So yeah, so these moves down, they have to be seen as well as a technology investment because they are within the technology sector, and therefore they can be compared and correlated, I would believe, with things like the Netflix and the PayPals and the ARK in terms of that. So when I start to see a turnaround in those, I would expect to see a turnaround in these as well. And so again, that would apply to this week. A lot of exhaustion here. A lot of these are showing a lot of weakness right now. But my question is, and what I'm going to be looking for this week, are they able to take a bit of a breather, push a little bit higher this week? And if that's the case, then I'll reassess next week. Are we bottoming out, or are we just taking a breath before we continue down? And so again, for that reason, I exercise quite a bit of caution. I think currencies should be offering some really good opportunities. And again, I want to watch these major levels. So I'm going to exercise caution until it becomes clear whether we're going to start to push through those major levels or start to take a breather back from that. But again, there's a case here, and I hate it when there's a case for both ways. I don't like that. I prefer to be able to go, look, I expect a weaker dollar this week. But honestly, because we are sitting on the precipice of a potential change in our markets, then I have to just be prepared for both. At any rate, I do hope on some level you found this instructive and useful. Please exercise some caution. I will be doing that, and risk manage very, tightening everything up and just keeping an eye on it and keeping an open mind with whichever way the markets can go. Thanks very much. Have a great week.